Are you responsible for choosing benefits for your company? Well, if so, it's important for you to know that health insurance is not enough. It's not enough for you, it's not enough for your family, and it's not enough for the employees that you're representing and making decisions for. We're Shannon and Michael, we're the founders of Healthcare Genius, and we are here to give you the best information on retirement and healthcare. So for more info, make sure you subscribe to our channel and click the bell to be notified when we come out with new videos. Next question for you. Did you know that the number one cause for bankruptcy in the United States is related to medical events? Most people don't know that, but when they do, they figure it's because medical bills are so high. And while that can be true, the actual reason for the bankruptcy isn't because of the medical bills. It's because all of the things that surround them. So an example, the inability to work is probably the biggest factor in that scenario. If something happens to you and you can't work, you're in a lot of trouble.
Shannon, you're absolutely right. When you think of being out with a serious illness, it's that inability for you to work, also your spouse. Mm-hmm. When that spouse or family members are having to take off time to help you as well, another big cost. But in my own experience, and in some of our other videos, we've talked about this, but I've had 2 or 3 family members where the health insurance went ahead and paid for some of the treatment, but if it was experimental or if they had to go out of network, they were going to have to write that check. And how many of you, I think, in that situation are going to really pretty much spend as much money as you have, it could be out of your retirement plan, it could be out of your savings, to live, to survive?
Yeah, and a lot of times when we're in these scenarios, it's because it's a medical event that's so big that you'll do anything that you have to in order to overcome it. So whether that means going to an MD Anderson or a Mayo Clinic that might be out of network, or trying some treatment that's not considered traditional, some of those things aren't covered by health insurance. So those are some of the things that we want to talk to you about today, and make sure you're aware of the full picture so you know how your employees can protect themselves and how you can allow them to do that.
A lot of employers will offer short and long-term disability insurance to their employees. Now, it depends on what levels that they offer, and it's important for you as an employer and an employee to understand what those different coverages are. Short-term disability really is designed to do just that, cover things that happen for a short period of time. Maternity is a perfect example of that, where most coverages will provide 6 weeks of payments for a maternity event. Mm-hmm. Or for a pregnancy. But it could also be things that happen like a car wreck, or you just get some sort of an illness. It's not going to keep you out for a year or 2 years, but it might keep you out for 30 or 60 days. Mm-hmm. So that's really where the short-term policies come into play. They normally have some sort of a waiting period. It could be 7 days, it could be 14 days. That's designed in a lot of cases to match with the employer's paid time off policy, so that the employee can be collecting their paid time off, and then when they run out of that, then the short-term disability kicks in.
Right.
Then most policies will stop at 90 days or 3 months, and that's where the long-term disability will kick in and be payable all the way out to normal Social Security retirement age, which could be 65 or 67, depending on when you were born. So those are the policies that a lot of employers offer. But Shannon, I know there's some weaknesses that you see in those.
Yeah, and as an employer, you may or may not be aware of this, and unfortunately, most employees are not. And that is the fact that employer-paid disability does not cover all of your income that you're losing should you become disabled in the short term or the long term. And what that means is there are actually maximums that employers can cover. So if something happens, you may only have 60% of your income that disability policy will be covering. 60% for some people isn't enough to pay their bills, or even if it is, the other realization that you have to come to is that benefit is taxable. So not only are you not getting what you thought, but after tax, you're getting even a smaller amount. And so one thing that we like to encourage employers to do is talk to their employees about what these policies are, how much they cover, and if they aren't enough for that employee, should they become disabled, have them consider an individual disability policy. A lot of people don't realize that that's a thing. And so that can fill in some of those holes that you realize the employer policies may have.
Great point, Shannon. The other part of those individual policies is you can take them with you. So once you own that policy, that's yours. You can take it with you. If you go to another employer, you can negotiate that into your salary requirements that they pay for that individual disability policy. So we think everyone should at least be looking at those as an alternative or an additional option to what their group insurance would look like.
We also like to think of it as income replacement insurance, and everybody should have it. So whether you're an employer or an employee, feel free to comment and let us know what your experience has been. Do you know all about these policies and all about what you need? For most, the answer is no. So let us know about your experience.
Thanks, Shannon. Another area that we've seen employers and employees really embrace are some of these ancillary benefits like critical illness or accident or life insurance with living benefits. These policies, a lot of people know them as AFLAC, or they see AFLAC, and that's what people think about, but there's a lot of variations of those. Extremely important. I had a CFO client of mine that really didn't like these policies for a number of years until she saw some of the benefits that her employees were getting by having these coverages, where they were up skiing and something happened to them. They broke their leg or they had a knee injury, and these policies actually paid part or all of the deductible that that employee had for their health insurance. So really important to be thinking about these types of coverages.
Yeah, definitely. And one of the things that we like to talk to our clients about is the importance of offering HSAs, which go hand in hand with high deductible health plans. And so if that's something that you offer your employees, that's phenomenal, because as many of us know, HSAs are the number one way to save tax-free for healthcare costs in retirement. However, it can put your employees in, when you have a high deductible health plan, it can put your employees in a vulnerable state, because if something does happen and they have a $10,000 deductible, they may feel like they don't ever want to be put in that position, and they can't financially be put in that position. So it can be a good way for your employees to save some money on maybe more affordable premiums on healthcare plans, but then also purchase these ancillary products that can fill in that gap, again, for a really reasonable price.
No, those are really good points, Shannon. A lot of employees don't necessarily contribute to the health savings account. Again, we're trying to encourage that with our groups. But if they don't, and they don't have the money to pay that out of pocket for those deductibles, then these plans really can create a big benefit. Another area, and this is a story that actually happened, are critical illness policies. One of our, it's actually a vendor of ours, she was diagnosed with cancer, and at a very young age, her company provided critical illness insurance, so she was able to take the benefits from that and freeze her eggs, so that when she went through all of her treatment for cancer, and she had to have a hysterectomy, unfortunately, but she was able to take her eggs once she was through all the treatment and have a surrogate, and she now has a 6-year-old son. So,
right. And that's a huge success story, but it really highlights why health insurance is not enough. That's a scenario that most of us don't think we'll find ourselves in, but if we do, we assume our health insurance is going to cover all that. And, fertility, for a lot of people, one of the most important things, is not always covered by health insurance should you have a disease like cancer. And so, yeah, great story of how that helped her. And had she not had that, it would have put her in a really tough financial position.
Yeah, and every time I see her, I ask her about her son. I think he was starting T-ball last time I saw her, and it's always a great feel-good story about really the benefits that these policies can provide.
Yeah, and one more thing on these policies is employers don't always realize that they can be completely voluntary. So there's really no risk for an employer to offer these to their employees. And then employees can decide, they can learn about them and decide whether or not that's important to them. And then you leave the decision in your employees' hands so they can decide what's most important, and it doesn't really affect you either way.
Another benefit that we talk a lot about, long-term care insurance, traditionally that's associated with somebody who's older going into a nursing home. But believe it or not, a significant portion of people in nursing homes are under the age of 65. They're not old. They've gotten there from, can be illness, but can also be accidents. So there's a unique policy out there using life insurance. It's called life insurance with living benefits. So we see those types of programs also something that an employer may want to think about offering to help their employees protect themselves from those events while they're still working.
Absolutely. And a lot of employers are already offering some form of life insurance to their employees. And so if you're an employer and you offer life insurance and your life insurance policy does not have living benefits, you need to look at that policy and maybe consider changing to a policy that does have living benefits. Because they're out there, they're reasonably priced, and can be a great option for your employees. When it comes to long-term care, you really do have a lot of different options. So we've actually made an additional video that goes into more depth about different ways that employers can help employees with such a big issue, which is how to pay for long-term care. So stay tuned for that video.
If you're an employer and you're listening to this video and you're wondering, how do I implement all of these plans? They're not as difficult as you think. Matter of fact, there's a lot of programs out there that can help you with the shopping experience for your employees so that they can actually have the ability to look at these benefits. If you're doing them on a voluntary basis, they'll be able to shop and pick really which benefits fit them the best. But important to be thinking about this because employees more and more are asking for these types of benefits.
That's right. So if you're interested in learning more about some of the benefits that we've mentioned, please make sure to check out our other videos. Go to our channel, subscribe, make sure you click the bell to be notified when we come out with new videos. And if you're interested in becoming a client, we actually have a link in the description below so you can apply to become our client and get your ducks in a row.